go ahead and get started. My name is Camille and I'm with NCALL Research. I'm the Consumer Service Administrator here, and I kind of sit between a couple different departments. I sit between the pre-purchase, the foreclosure, free financial coaching, and then the financial education. And financial education is really where my heart lies, because I just feel like so often we don't know what we don't know. And I love to find out things and spread the word. So tonight we're going to be covering one of my favorite topics of student loans. Student loans, of course, is a hot topic in the world right now. And a lot of people have questions about what's true, what's not true, what to do, and what not to do. So I just wanted to take some time tonight and kind of go through what's going on with student loans and then answer any questions that you guys might have. In order to do that, a lot of times I like to know who is in the audience and what are some of your expectations and what kind of caught your eye with this topic. So that way I kind of make sure that I kind of cover where you are. So Elizabeth, a little bit about what brought you here tonight.
I just started Habitat for Humanity and was indicated that I needed to have 3 sessions, and this is the first one, so I decided to do it. I have a daughter that has student loans and just wanted to find out more information about it.
Okay, sounds good. Anyone else? The title, Maria, I know you came to me with the idea of presenting this topic. What kind of prompted you to think about this topic as one of your series?
Well, first of all, I have Parent Plus loans, thanks to my daughter, who also has her own set of student loans. I served with AmeriCorps last year, so I have a educational stipend. What do we call it?
Siegel Award.
Mm-hmm. Yeah, a Siegel Award that I need to do something with. I also, mine have all been in forbearance like everybody else, but I also worked before I came to Habitat, I worked in higher ed for 18 years for the same institution. And so this is something that I saw our students and our alumni. There's more student loan debt in this country than there is credit card debt, and it keeps people from doing things that they want to do in life. I saw that for years and also that, students, when they sign off on student loans, they don't necessarily know what that means or what that's going to entail or what kind of financial problems, especially from a parent side, and with first generation students, like no idea what you're getting into. So that's where I'm at. It's both personal, both a personal need for myself, but it's also like I've seen a lot of people affected by it.
Yeah, absolutely. Absolutely. And I'm sorry, I didn't catch your name, the other person in the room.
Barbara.
Hi, Laura.
And Heather's here, you can't see her except for that hand.
What are your thoughts about student loans, and why does the topic interest you?
Oh, are you talking to me?
Yes.
Oh, okay. All right. Well, personally, I do not have student loans, but I do know people that have them. So whatever I can learn tonight, I can, let them know about it.
Yeah, definitely. So I have this presentation tonight that is prepared by the federal government, Federal Student Aid, and the Office of the U.S. Department of Education prepared this back in December, because as we had already discussed a little bit, all the federal student loans have been in forbearance since March, or really April of 2020. So, it's kind of like that thing, out of sight, out of mind. So when they were going to be coming due in January of 2022, nobody really remembered, how much they're supposed to be paying, who they're supposed to be paying, if their automatic deposit their automatic withdrawal was still going to be occurring, and things like that. On top of that, of the consumer not really understanding how to go back into repayment, there also was a change of servicers. So the federal government contracts servicers to service these type of loans. And during the pandemic, some of those servicers decided not to renew. So there was going to be a shift of data between services. You know, some people were going to be getting more, people were going to come off the list. There was going to be some new servicers. And then they finally realized, wait, we're not ready to start accepting payments yet. We don't have all the information from all the borrowers. We don't know how to tell them how to pay us back. You know, it was just kind of like, we're not ready. So they postponed it again until August of 2022. So this is a presentation that they started, they created called Preparing Borrowers to Restart Student Loan Payments, but it really goes into the type of student loans people have. It goes into the forgiveness piece, along with some things of watching for scams and things like that. So I thought it would be kind of, it will cover just about everything that we want to cover tonight. Of course, if you guys have questions as we go along, please feel free to answer them. But we're going to go ahead and get started.
Yeah, Camille, I just wanted to let you know, Heather, who you can't see is here, but I know that she's actively currently a student.
Okay.
And she's also in the process of buying a house. So she has super exciting fun things going on.
Awesome, awesome.
I've been dealing with the Department of Education for the past 6 months.
Okay.
And it's not been fun.
Yeah.
Yeah.
Things are getting better, but they're not better. You know what I mean? Like, they are different people there. So the agenda, basically, we're going to go over the borrower checklist. I want to dive into the different type of repayment plans. We definitely want to touch on public service loan forgiveness.
Yes.
Again, we're going to talk about avoiding student loan scams, and then I'm going to give you guys some resources and tools and free next steps to take if you have more questions. So the borrower checklist, basically, anybody who is currently in their forbearance, they want to start contacting their loan servicer. So you want to make sure that your loan servicer knows who you are and make sure your contact information is up to date with them. You know, have you moved? Do they have your current address? Do they have your current phone number and email? Are you checking your email? Are you like me? Do you have 26,000 unread emails in your Gmail account? Are you missing something there? Review your auto debit enrollment information. Again, a lot of those stopped, of course, when the forbearance hit. So you want to make sure that they know where they're going to be taking that money out, and you want to know how much they're going to be taking out. Again, this says January 31st, but this is all going to be reset for August the 31st. Okay. Make sure that you are on the best repayment plan. And that's going to be our next part of the agenda, is talking about all the different repayment plans. Consider applying for the income-driven repayment plan. We'll talk about that when we get into repayment plans. And then you're going to, if you qualify, look for the public service loan forgiveness. So what does all this mean here? When you sign in to studentaid.gov, this is what it looks like. This is a website that basically the federal government has made a dashboard for all things financial aid under them. So studentaid.gov is where you go to apply for your FAFSA, where you go to apply for a student loan, where you go to get information on your student loan, consolidate. They have brought all these different websites and put it into one, which is really going to be a great thing once it's all done. It's a little bit lumpy now, a little bit quirky, but I get the vision and I see them getting closer and closer to the vision of having a one-stop shop when it comes to all federal aid.
Good.
So this is the dashboard. It'll tell you in that blue circle to the left how much you have borrowed in student loans. And on the right, it will show you how much you have been given in grant funds. Of course, loans have to be paid back, and typically grants do not have to be paid back. But all that information is on there. So if you ever have a question about who your servicer is or how much you owe, all that information is always going to be in the studentaid.gov. It also will identify your due date, your anniversary date, and allow you to sign up for the repayment options that we're going to be talking about. So again, they used to have, like, I would say 6 to 10 different websites. They are bringing them all into studentaid.gov. That is the primary place for your personalized dashboard when it comes to your aid.
Yeah, it's nice.
Yeah, good. That's a
It's
lot.
So
Right.
understanding the repayment plans. So this is a snapshot of the standard repayment plans that they have always had. You have your standard, which are payments. They're fixed to ensure that your loans are paid off in 10 years. Okay. And then you have graduated. Graduated shows you payments that kind of start a little bit lower, and then every 2 years it goes up a little bit, assuming that your income is going to go up a little bit. And then you are still paid off in 10 years. The extended is for those who have student loans of over $30,000, and this will fix or graduate those payments so that they're paid off within 25 years. So because you owe more, they will allow you to extend them out. But of course, those of us who have been in this loan thing for a while, the longer you extend them out, the more interest you're going to pay. So the more expensive the debt becomes, okay? So these are the standardized repayment plans that have always been around. It does not matter where you work. It does not matter how much you make. It does not matter any of those things. These go by how much you owe and then how long it's going to take for you to pay them off, okay? But a couple of years ago, we realized that not everybody is making the same thing coming out of college, okay? And they created these new plans that will allow you to determine your payment based upon your income. So they are called the income-driven repayment plans, the IDR. So you can owe $30,000, but if you're only making $10,000 a year, your payment might be $0. If you're making $30,000 a year, your payment might be $200. If you're, it kind of goes by your income. And you can kind of see that they continually have added additional payments, additional payment plans. In 1994, they have the income contingent plan, which I believe is 15% of your discretionary income. And then in 2009, they started the IBR, which is a little bit more friendly. Pay as you earn is from 2012, and then revised pay as you earn, repay, is from 2015. So in your dashboard, when we start looking at payment options, it will tell you how much your payment is going to be estimated in each of these payment plans, and if your loans actually qualify for these type of plans. Any questions on payment plans so far?
No.
Okay. So this is a little puzzle piece that they put together, and it kind of is showing the differences. So with the ICR, the income contingent plan, you are going to just need to have an eligible loan. You don't have to show a need and you don't have to be a recent borrower. You just have to have an eligible loan. The income, the IBR, you need to have the eligible loan and then also show a need, meaning it's going to go by that income and you have to meet a certain threshold. Typically, it's income and household size. The pay, that is where you have to have a recent loan, and I believe it's a loan after 2015. And then the repay, they kind of went back to the original idea of everybody should be able to get help when they need help. And they took away the need and the recent borrower. So that's kind of what your chart will look like when you log into studentaid.gov to see what your payments will be. It will tell you which loans are eligible for which repayment plans. So there's some eligible loan programs. Direct loans is available for every kind of income repayment plan. It's where we get the federal family education loan, the FFEL, that gets a little bit tricky. That's not the Parent Plus. It's an older loan that I don't even think that they offer anymore. And what we typically do is if somebody has that type of loan that's not eligible, we can reconsolidate into an eligible loan if necessary. So it doesn't mean, oh, I have that loan, there's no help for me. No, there are still some things that we can do if you have that federal family education loan program. So eligible loan types. So this is where we get into the Parent Plus and different things like that. So loan received as a student, they are eligible for all types of income-based repayment plan. Loans received as a parent are showing that no eligible loan types will compare for that. Now, it's my understanding that you still can get the ICR, but again, we have to do a little workaround to get you there. And I can confirm that for you.
Thank you.
Consolidations, no parent loans there. If you have a consolidation with no parent loans, you can do any of those income-based repayment plans. If you have a consolidation that does have parent loans, you can only do the ICR. So that's one of the workarounds to get the Parent Plus loans into a forgivable payment option. Because when we get into the payments, we're going to see the public service loan forgiveness is a 10-year plan. Well, if we are on one of those standardized plans, those plans are created where your student loans are paid off in 10 years. Okay. So you wouldn't have anything to forgive because you're paying enough to pay them off. So that is one of the workarounds for the consolidation. I mean, for the Parent Plus. So this is kind of how they determine how much you can pay back. They go by the discretionary income. The ICR goes by 100% of the poverty guidelines, and that goes by your state of residence and of course your family size. And then the other three, they go by the 150% of the poverty guidelines, and they include your family size and your state of residence. So each year we have a little chart that we're given so we can give people an estimate of how much their payment will be on these different programs. And I will email this PowerPoint out also. But here's a breakdown again of the formulas that they use between the 20% discretionary income down to the 10% discretionary income. The majority of my clients are able to get into one of the income-based repayment plans based upon their income and their family size. So it does get help. It is helpful to them. And then what happens is every 12 months, you are then recertifying your income, and your payment could change, whether it goes up, down, or stays the same. Every 12 months, you update your income for them to determine. If you miss that deadline, then it goes back up to that standard. So typically we're able to, kind of help people get that through. So once we have the repayment plan, then we also go the next step to, okay, but when am I done? When can I actually get these loans forgiven? The income contingent repayment plan is a 25-year repayment plan. The IBR, income-based repayment, is also 25, but you'll see that the pay and the repay for undergrad loans is 20 years. Now, yes, that is a long time. But of course, there are probably thousands, hundreds of thousands of people who have been out of school for this long, but still have student loans. The reason why that happens is because our first, I don't want to say our first defense, but a lot of times when we go and start getting the bill, we're either advised by either someone at the company or a friend or a classmate or maybe even the school that you are allowed to do a deferment or you are allowed to do a forbearance, which is totally true. But what they don't say is we're extending now the time that these are going to be, have to be paid back. So a lot of people, feel like, oh, well, they're giving me a grace period or they're giving me a deferment, and they kind of get locked in that zone. So this time never starts ticking because their payments are never in repayment. So that is something that I try to let people know, like some people qualify for a zero payment and that zero payment works towards forgiveness. So I would rather them get that $0 payment that works towards the forgiveness than get the deferment or the forbearance that is just going to kind of hold them hostage in this debt. So the process is pretty seamless. Like I said, they have been really working over the past, I would say at least 3 years. I know it was before COVID when they started consolidating, but the process is pretty straightforward. You can click on this lower my payments button here. You can apply for the income driven plan. You can choose which plan you want to go to, or there's actually a button that says have the server choose the lowest option for me. So it's just a general application. You upload your taxes. If you don't have your taxes or your income has significantly changed, you can then fax or upload your pay stubs, and it's all done electronic. It typically takes, I say, between 4 to 6 weeks to get an approval and then get your first payment. So, of course, with everything being held in the COVID forbearance, a lot of people have not done this. That's another reason why they determined that they just weren't ready to start accepting payments in December. But we're encouraging people to reach out to their servicers and find out what their options are. So that way, when August comes, then they'll be ready to go. A lot of people self-reported because they weren't working during the pandemic, and they were, receiving the unemployment or things like that. But now that things are getting a little bit back to normal, so, uploading those taxes is the best, most efficient way to go ahead and get your loans recertified. They also have a loan simulator. We're not going to talk too much about that today. The one, Heather, that you are in school, if you ever wanted to estimate, how much you would earn, how much you would owe if you continued on the path and what that payment would kind of look like once you got out of school. They kind of break that up into 3 intents, which is a repayment strategy. And then if you're having trouble making payments, and then let's say I wanted to go back to school to get my PhD or something, I could actually put those numbers in there to see what that would look like. So it's a pretty cool simulator for anybody who wants to kind of forecast what the debt would really look like. And now that I'm talking about it out loud, it probably is a good simulator for I teach financial literacy at the high schools, a program called College, Careers, and Cash. So it's probably it'd be good for them to even see what their college choices, what those decisions are going to look like in a payment. So I'm not going to say it again.
I said, yes, please do that, because
it's hard because, we have an Excel sheet now, and we kind of line each of the schools that they're accepted to side by side so they can kind of see it apples to apples, and they still just want to go where they want to go. It doesn't really, they're not, I'm not gonna say 100%, but I will say at least 75% of the students are not thinking about the cost. They just want to get out of Delaware. I don't know if it's different in other states, but the students that I'm seeing, they just want to get out of Delaware. But I think I might talk about that because we have a retreat each year about recommendations. So I think that might be a cool piece to put into that puzzle.
Yeah.
So now let's talk a little bit about public service loan forgiveness, PSLF. I believe this program started in 2007, and it actually was started by a group of law school students, as I understand it. And basically the law school students wanted to serve their community by being like public defenders and different other positions, but they could not afford to take those positions because if the salaries were not would not pay them enough to pay their student loans. Again, at that time, all they had was the standardized payment. So I have law school students and medical students that they owe $300,000, $400,000, $500,000 in student loan debt. Those payments could be $3,000, $4,000, $5,000 a month. So they weren't able to take the lower paying jobs to serve their community because their payments were so high. So they helped create this program, like I said, in 2007, where if you are able to go onto one of those income-based repayment plans and pay less, you could pair it up with this public service loan forgiveness program and have your student loans forgiven after 10 years of service. So it's a great program for the way it was intended. And I always say it's kind of political. These are the basics. You have to have 120 qualifying payments on qualifying loans while working with a qualifying employer, and then apply for the public service loan forgiven. The amount forgiven is not taxable income. So each of those little curves have become barriers to people actually getting approved for this program. So we're going to talk a little bit about that later. Because like I said, it's 120 payments on specifically direct loans while working for that qualifying employer. Doesn't have to be the same employer. It just has to be a 501c3. I think it's city, federal, or state agency. And then you still have to be working for a qualifying employer when you apply for and receive the public service loan forgiveness. And of course, AmeriCorps is definitely qualifies for that also. So eligible loan types, direct loans, including consolidation loans, and then there's that parent plus loans, but it has to typically be consolidated, okay? So like I said before, even if, they should have really made that second circle red instead of green. I'm sorry, things like that just like kind of catch my eye, but like the X is supposed to be red, the X is supposed to be green. But the other type of loans that are not eligible, typically we will consolidate them into an eligible loan, okay? Eligible payment plans, eligible payments, they have to be on time. I think they give you a 10-day grace period. They have to be in a standard plan or any income-driven plan. It has to be for at least the amount due, so you can't make partial payments. And they can be non-consecutive. So if I made my payments for March, April, May, and then for some reason I needed to go on deferment for 3 or 4 months, and then I pick back up, they count the payments that are made. Not making those payments for like a deferment or forbearance is not going to disqualify the payments that you made previously. Now, so it is 15 days, actually, I thought it was 10 days. So if it's more than 15 days late, then that payment will not count. If you are in a graduated, extended, or some type of alternative plan, those payments do not count. If it's a partial payment, it does not count, and made when not required. So if you are in an in-school deferment and you make a payment, it will not count towards your forgiveness. Changes to payment counts, multiple payments in less than the amount due may only be counted only if all smaller payments add up to the amount due and are paid within 15 days. So basically, if your payment's $100 and you pay $50, but you get there before that 15 days, that can be counted. Lump sum payments will be counted as eligible, limited to 12 months or payments, or until IDR plan recertification date, whichever comes first. And down there is where it says exceptions for AmeriCorps, Peace Corps, and DOD still apply. So I came into NCALL as an AmeriCorps Vista, and I was told that once I got my Siegel Education Award, whenever I get my income-based repayment plan amount, times it by 12, and then submit my AmeriCorps to pay my 12 payments. I did that for, I think, 2 or 3 years, and then I found out that that was not correct. So again, it really has been not a moving target, but they've been working out the kinks. But there was a lot of misinformation that was given when this first started. So this kind of lays out where they are today.
So what should I do? Should I give it to them all at once? I mean, or should I have them trickle it out into 12, have them keep paying payments monthly out of the Siegel Award?
So what I have been told, and we can ask the question and get documentation for it. What I have been told is you can only do that for once. So for that one time, Now, there's a reason why they put AmeriCorps specifically on here. So somewhere they have that AmeriCorps exception written down. We would just have to get that in writing of how you should submit that.
Yeah, thank you.
Eligible employment, you have to be full-time, which they feel is 30 hours or the equivalent. Government, including military, all 501c3 nonprofits, and there are a couple other exceptions. Again, government typically includes city, state, and federal. What you cannot do is the part-time work that does not add up to full-time. So if I worked for NCALL for 15 hours as a 501c3 and Habitat for 15 hours as a 501c3, then I meet my full-time requirement. But volunteer work will not count. For-profit entities will not count, including those that employ essential workers. So like most hospitals are a 501c3, but a private doctor's office would not be a 501c3 typically. So my nurses and medical staff, and maybe not even medical staff, even the custodians, the receptionists, you know, doesn't matter the position. It doesn't matter if you're making $600,000 or $6,000. As long as you're working for one of these qualifying institutions, then you're good to go.
Yeah, the college I worked for was a private college, so it's nonprofit, therefore it qualifies.
Yep. So, so it's really all about the employer. All federal, state, local governments, including public schools and military branches, are typically covered. All 501c3, other nonprofit organizations that provide a qualifying service, such as public safety and things like that. You know, our police, typically if it's ambulance, things like that. Multiple part-time jobs can add up to full-time employment. 2020 regulatory change on religious activities now count towards full-time activity job. So that's something that's new. Must be employed by an eligible employer when forgiveness is granted. So people are starting to get their letters that their loans are forgiven. They got to wait until they get the $0 letter before they quit that job. Have to still, you know, I can just see people going here. Monday morning, I got my letter. Peace out. So they make that very clear. You have to be totally forgiven. You have to be still employed by this type of employer the day that is forgiven, and then you're free to go off into the world
and make gazillions of dollars.
Yeah.
That's what we're all qualified to do, right?
Very technical, that retirement fund. Okay, so as I said, this has really been a work in progress. I've seen things go all over the place with this over the past 10 years. And there's been a lot of lawsuits. And I think they said maybe like 1% of the people who thought they were going to qualify got, you know, got approved. And it's just been a big mess. So what the Biden administration has done was they have provided a temporary expanded public service loan forgiveness. So people who didn't know what they didn't know, or who were like literally misguided like me by a professional who did not understand what they didn't know, have this window of time, I think it's 12 months, that we can go back and get our stuff recalculated. So like I have clients who were able to, they were paying late. And so they had X amount of payments that never counted because they didn't realize that by paying late, not 30 days late, but just paying late was not going to go towards it. All their payments now are counted. All my AmeriCorps payments are now counted. So they're going back and they're just trying to start fresh with anybody who was misled or uninformed can now, you know, qualify for the forgiveness. So this temporary expanded relief provides loan forgiveness for those who do not qualify for public service loan forgiveness only because some or all their qualifying payments were made on non-qualifying plans. So extended and graduated, that definitely is now, for this particular temporary relief, they will count those payments. Again, the late payments are now being reconsidered. The AmeriCorps are now being reconsidered, and there was something else that was being reconsidered also. But it's really a good opportunity for people to be able to get those payments counted. Because once you submit your paperwork, it'll tell you how many payments you have until forgiveness. There's a little chart that will be on your bill every month that will say how many payments closer you are towards forgiveness. Of course, the COVID-19 emergency relief, that was a forbearance that was set in 2020. No one has had to make a payment, and every single one of those payments that they did not have to make have counted towards public service loan forgiveness if you were on that program before it started.
Wow.
So that's like a free, what, we're at 24, but 30 can be a free 30 months of non-payments towards the 120 that you have to have.
I like it.
That's awesome.
So here's a little bit more information about that limited time temporary relief. It's only good through October 31st. The payments made on whatever the program, no matter the repayment plan, no matter the loan type, except for that Parent Plus.
It's always except for the parents.
Can now be reconsidered. The employment requirements still do apply, but everybody has to act now. And that's why we're doing workshops like this, especially state of Delaware is the biggest employer in Delaware. So we're trying to make sure that some people just gave up, so we're trying to get the word out that we have this small window of time to try to grasp, that temporary waiver. If you only borrow direct loans, you file your form. The form is all electronic now, which makes it a lot easier. The form will then go to your employer to sign, just stating that you are a full-time employee there, or if you're part-time, how many hours you work. And then the form goes off to your servicer. Here's a little snapshot also about the payment count and basically how that works. Like I said, they'll actually send you a letter saying every single payment that you made and if it counted, if it didn't count, and if it didn't count, why it didn't count. Things are getting better. They're trying to clean it up, I think. What to expect when you're expecting. Wasn't that a book? We're all women on here. That was the Fed loan service transition. So again, it's a work in progress. The federal government had maybe 7 different servicers, but only one servicer was allowed to process public service loan forgiveness loans, and they quit.
Well, they didn't quit yet. Because I just went through this process and they were like, put it in now before we switch.
Before we quit, right? So they announced that they would be leaving this program July of 2021. They have extended that to the end of 2022, but they're the ones that are holding all of the data of all the people who are supposed to be working towards forgiveness. So out of all the servicers, in my opinion, this is like the most important one because they're the ones that are holding all the forgiveness loans. Again, that's another reason why they're trying to get this stuff fixed up. But the certification is electronic We're telling everybody to download all of their documentation, keep it in a separate file, so that way when you don't have access to your Fed loans portal anymore, you still have that as a hard copy, and we're just hoping that everything kind of goes smoothly there. Forgiveness will automatically be processed when possible. As of mid-November of 2021, 25,000 borrowers have received $1.7 billion in forgiveness, and they feel like that is probably going to be doubled this year because, again, they're going back, cleaning up, and forgiving. Now, you know, I'm always the devil's advocate type of person. Like, I want to know about the people who actually paid off their loans because they were told that they were going to be denied. Like, do they get that money back because they were denied forgiveness, so they went ahead and paid it off, but now you're going back and saying we were wrong, you know? So I'm hoping that there's some type of consideration for that. Again, everything is now electronic. It's really simple. I did a couple for a couple clients. You just kind of go in, same website, studentaid.gov. You put your employer identification number in there. So if I work for NCALL and they have already done a certification, anybody else who puts that identification number in, the federal government automatically approves it because they know that they're a 501c3. They just have to get their hours verified that they are actually employed by there. But remember, we're also uploading our taxes. So they're going to see where your W-2 comes from also. That's just for the COVID. Worried about that. Application details, very, very straightforward questions. Yes, I have made my 120 qualifying payments. No, I haven't. That tells them kind of what bucket to put you in to get you to the next step. All your personal information, making sure that that's correct. Review and save. And then you'll get your confirmation. Again, it's been taking about 4 to 6 weeks. It's been speeding up since I started doing this probably in November, I think it was released. But if you upload your documents, it's of course faster than if you mail them and even if you fax them, because even with your faxing, it's about going into the portal and downloading and things like that. Any questions about, we covered the repayment plans and then we talked about the forgiveness piece. And we only talked about the public service loan forgiveness piece. There's other types of forgiveness for those who might have went to a for-profit school and they ended up on a list of schools of student loans that are going to be forgiven because the school didn't come through with what they were supposed to do. There's also the disability discharge. If a person is on SSDI and they have a total disability, there's a discharge through that. So there's a couple different forgiveness and discharge opportunities out there for student loans. Any questions on forgiveness?
No.
Okay. Just a quick little tidbit on student loan scams. You know, whenever somebody thinks they can make money, they're going to try to make the money. Everything you do for student loans can be done for free. You go to studentloans.gov and you can work with one of our coaches, but there's no cost for any of this ever. I have people who are paying $50 a month just to get a $0 payment.
What?
Yeah.
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 I mean, they call it a processing fee. They don't call it a, but these people think that they're paying $50 towards their loans, and they're not. They're paying a company to do these free 15-minute applications every year. You know, and when you read the contract that they sign, it says this service could be done for free on your own or something, like it says it right there in clear. But we sign everything on our phones and electronic, and we just feel like, okay, I can afford $50. and student loans are saying that I owe them $300, they pay it. So there's no charge for any of this stuff ever. Identifying grant scams. If it looks too good to be true, it probably is too good to be true. I don't understand where they get this information. Sometimes I get text messages. Sometimes things pop up on my Facebook feed. Like, I don't even know how they get the information that they get. But again, if you ever have any questions, we're here to help you, you know, kind of get back on track, or at least let you know what is valid and what is not. Because sometimes people get so hesitant to believe anything or open anything that they miss the real letter from the real people because they thought it was going to be just junk mail or something like that. Like, I almost threw away my son's gas rebate check the other day. I'm like, well, why would he be getting something from here? Let me, told me, I don't know what told me to open it. And I opened it, I was like, oh yeah, he was supposed to get this. But the FTC returns more than $3.1 million to victims for a student loan debt relief and credit repair scheme. It's just a lot. And of course, they see on there, the credit repair claim company said that they're affiliated with FSA and Facebook ads. So they know how to find people. So just be careful. And again, always know that you can reach out to us. Or if any of your friends or family ever start talking about something that you're not really familiar with, just let them know that we have student loan experts on staff that will help them for free.
Well, and the credit thing too, Camille, I know that I get a lot of applicants who say that they've signed up with something they saw on TV to do credit repair. I'm like, y'all need to just call NCALL. Like, just call NCALL and stand by me and quit paying those people money.
Yeah. I mean, I had somebody, they were paying somebody $99 a month to get $600 worth of stuff off of their credit report. And you do realize that you could have just saved the $99 for 6 months and then we could have paid it off ourselves. But you know, sometimes people don't feel comfortable making those decisions, and they just want somebody who's going to do it for them. And they just want to get the debt off, or they just want to get the phone stopped from ringing. And then that's when they kind of get themselves in those type of situations. Again, just student loan scams. And then sometimes I was able to get people's money back from those type of, like, when I knew that they were blatantly lying, I was able to get people's money back from the scams and things like that. But
For you.
Yeah, right.
there is a complaint center that you can, and they do suggest that you do submit the complaint, so that way they'll have everyone who's affected. So if there is a class action suit or something, they'll have your information. But NCALL has 4 financial coaches through the Stand By Me program. And Stand By Me is a totally free financial empowerment program, and they do work with the student loans. So they do help people, you know, fill out the forms, understand the payments. Sometimes, you know, I have people who just come back to me every year just because they don't feel confident. So it's funny because with COVID, with us being on Zoom, I'm like, oh no, you can share your screen. You can push the button. Now that it's all electronic, it's just so easy. And they're like, wait, did I just do that myself? Like, yeah, you did. Call me back next year, but you can handle it, you know. So it has become, it's been a hard road of progress, but it definitely has been a road of progress for them getting things a little bit more streamlined. And that is it. Hopefully that was helpful with some of the information that we shared. You know, a lot of people, like I said, is kind of out of sight, out of mind. I feel like the summertime is going to be very hectic with people who are trying to understand what they need to pay, who they need to pay, and how they're going to pay them. The other part of it is, you know, with us being in the housing industry, a lot of the true payments have not been counted in the mortgage calculations. So as those true payments start hitting the credit reports, along with the interest rates increasing, a lot of people are going to be even eligible for less than they are now in this market of very high priced real estate.
Yep.
So, that's going to be something that we're going to have to work through collectively to see how we can help clients. But we work hand in hand with the counselors. If the counselors see the payments, don't look in line with what we usually do, they'll send them over to a coach, and then we'll get them into an income-driven payment plan. And I tell them, you know, you can pay what you want to pay, and you can come out of the plan when you're ready to come out of the plan, but don't let the student loans be a barrier to getting into your new home. You know, yes, you might be, even my own son, yes, you might be able to afford, you know, $300 a month, but if we put you in an income-driven plan and it's 100, that's going to get you into the real estate that you want to go into, and then you pay what you want to pay. So, you know, it's not a bad thing to go into those income-driven payment plans, especially when you are working towards the public service loan forgiveness. When I have clients who are not working in that industry, then I tell them that by paying the income-driven repayment plan, your student loan balances are actually going to increase because you're not paying that standardized payment. So your interest is going to start to grow your student loan balance. If you're working for the public service loan forgiveness, yes, it will grow, but you know you're going to forgive the bigger balance anyway. So it's okay in my mind to say, okay, yes, it's going to increase by $3,000 over the next 10 years. That just means they're going to have to forgive more than they were if I didn't do it that way. So I think I'm pretty sure that it's here to stay, and I see them doing more and more to help people with the student loan debt that we are kind of straddled with.
Camille, how do we come see you or make an appointment with you? Because some of us need to do that. Do we contact NCALL? Do you have?
Yeah, you can just shoot me an email, and then we'll schedule it. Like typically I see clients on Thursdays and Fridays. I never know what I'm walking into on a Monday, and that normally trickles into Tuesday and Wednesday. So I typically do my client appointments on Thursdays and Fridays. But you know, we just set up another Zoom link and we can jump on, share screens, and figure out our options, and then go from there.
Wonderful, yes, because we have many folks who work here who should be applying for public service.
You know, I'm almost feeling like it should almost be like an employer requirement at a certain point. I don't understand why more people are not signed up. I don't know if they don't believe it. I don't know if they don't know about it.
I didn't know
I'm
that.
not really sure.
I think for me, because I tried it once before and they were like, no, you don't qualify. So I got turned down, even though I've worked for a 501c3 employer now for 20 years, you know, not the same one, but you know, I think that may be part of it, like you said, that people got turned down and now we have to go back and try it again.
Yeah, yeah.
I didn't know about it until I was on the phone with the lady, like freaking out. And she was like, just apply for it and see if you know, like if they'll approve it, because apparently they're approving a lot more than they have been because of COVID. So she was like, yeah, apply for this program. You work for a nonprofit, you probably will get qualified. So
Yeah.
Yeah. And
Try to spread the word, or try to do like a marketing campaign. Still hoping the Biden administration will forgive some 10, 30, 50 something. But we're definitely in a better position than we were. And then I think at least my generation woes have scared the next generation into getting into so much debt.
yeah.
You know what I mean? I do feel like all the publicity, all the you know, the elections, like just having the words and fear and stories come up over and over again, I think at least they know, they have taken it as a warning per se. So we'll work through it. But yeah, if anybody has questions, whether it's an employee or a client, feel free to give them my email and then we'll get them set up for a virtual appointment.
Thank you.
Awesome.
That's a big help.
Thank
And,
you.
Yeah, I will put that out there because I didn't think about the hospitals. So we have some homeowners who work for hospitals, so
Yeah.
they should be.
Yeah,
At least be into
like I
it.
said, I mean, most hospitals are 501c3s. So yeah, anybody who works there, all
Organization.
the state of Delaware employees, Dell State employees, like, yeah. Wilmington U, I don't believe qualifies.
No, it's a for-profit,
Yeah.
yeah.
But yeah, there's a lot of people who could definitely use the service.
So, well,
Awesome.
thank
Thank
you, Camille.
All right, I'm gonna probably do this again, so I'll shoot the flyer over to you guys, and then you guys can just remarket it as a replay. But
Yeah.
I'll do it for NCALL's clientele also.
Yes, please, we would love, because we will happily share and hopefully folks who missed it tonight will join that one.
Sounds good.
Okay.
All right, talk to you soon.
Thank
Talk to soon.
you.
Thank you.
Thank you.
Bye-bye.
Bye.